2018, and my name is Alejandro Zambrano, Chief Market Analyst with Trade Captain and AmanaCapital.com. In the next 600 seconds, I'm going to provide you guys with a quick overview of the Euro, Bitcoin, Gold, Crude Oil, and the DAX 30. And if you're new to this is a live webinar that we conduct on the live trading room Monday to Friday at 9 a.m. London time, unless of course I'm traveling or in some sort of a meeting. Of course, always trying to avoid that so I can be with you guys here in the early morning. Okay, let's begin. And before we start, as always, I need to stress trading financial markets is unfortunately risky, and there's a genuine risk to lose all of our invested money. So please bear that in mind before you start trading. And of course, down here you have the risk disclosure, so don't forget to check that out. Okay, Euro versus the USD. As you might remember, we said already when trading down here that around these levels traders are probably going to book profits. Now if you look at the market right now, over the last few days the market has been about 332 pip above the low, which means that at least in the very short term, traders that are looking for 50 or 100 pip gains, they wouldn't be buying here. Why? Well, because they need to risk about 332 pip to get involved, and that's a little bit too much, especially if we relate that to the potential profits. So the ideal entry is slightly lower at 126.27. 121.27. Why? Because down here we'll risk about 224 pip, and if it goes to the upside we make about 200, and obviously if it heads to the upside even better. Now a lot of people say if you risk 100 pip, look to make 200 pip, and that is something that is gonna improve down here. Like imagine if we go all the way down to 120, then we'll risk 100 pip, and then if it goes to the upside we'll make 300 pip. Now the issue is this though: if the price is allowed to go all the way down pretty much to the prior low, so if it's allowed to break below say these Fibonacci levels, so if it allows to correct more than 61.8%, then usually that's just an indication that the trend is not very strong. So even though the risk-reward ratio just becomes better and better the closer we come to the low and the stop, doesn't actually mean that it's better for us, because many times when the price almost goes down to our stop loss, we eventually just get stopped out just because the trend is not strong enough. So the ideal entry is around a 50% correction, if not a 61.8, but not much lower than that. So with that in mind, the risk-reward ratio up here is not good for new long positions, at least not right now, and I suspect traders might look to buy around 121.27. The alternative is this: is that because we're trading sideways here, some people are probably going short. I mean, most retail traders are short. If you click on tools, sentiment, at least yesterday, most of the market was selling the euro dollar. Let's see if I can find it here. So euro dollar here, 68% of people are short. So this means that there's probably a good amount of stop loss orders just on the other side of 123.23, which means that if we take out this level, those stop loss orders are triggered, and that lifts price to maybe 124. So there is the alternative, and that is that on a break to the upside, this market heads to the upside. Here's the price of Bitcoin, and Bitcoin had a nice bounce yesterday. You could have seen this as well in other coins as well, like Ripple, which actually had a positive close. So you might remember what I said. I said that on a break to 12,000, this market can go down to 8,961. Now we pretty much reached those levels. We missed the target about $300, but what is $300 and something like Bitcoin is really nothing. So here the market bounced, and you can see here we have some interesting candles. This first candle also is interesting, went all the way down and then it closed a little bit higher, leaving this what we call a shadow on the daily chart. But this is a typical sort of end of decline sort of candle, and most likely now, at least what I think a lot of people will do, is that they're probably going to look for a little correction, maybe down to like 10,395, and then stop loss, then the buy probably maybe at 10,000 or so here, and then stop loss goes just below here. However, I'm gonna be a little bit more cautious. I mean, there's actually two ways of trading this. either you just believe in the whole idea of Bitcoins and believe that the overall bullish trend is going to remain intact. Personally, I think there is space for Bitcoins for the rest of 2018. Is it going to be a space for Bitcoins in 2020? Well, that could be different, and I do think a lot of the Bitcoins maybe would have been gone at that point. Well, not all of them, but at least there's less traffic, and most of it is just linked to one or two, just a few coins. So from that perspective, as I said in the past, there are people, what they do is they buy maybe 20% of the portfolio, maybe 40, and then when the market actually looks to bottom out, that's when they start to add to the positions. And when can we do that? When do we know better if the trend is probably bullish? I think that's going to happen when the market here, goes up and then down, and then when we take out whatever high we're working with, at that point I think it makes sense to look to get involved and look to rebuild the position more than just buying maybe 20% of the portfolio, which is something actually what I did. Not in Bitcoin, but one of the other altcoins. I bought with about 20% of my portfolio. So what's the plan here? Again, I think in the short term, purely technically, I think with that bullish candle, it is a sign that the market is trying to bottom out. And for now, I'm gonna remain neutral. But of course, if it goes up and then down and then up again, which might happen in the next day or two, I think at that point we may potentially start to build more and have a more sustained low. So for now, we'll be cautious. Let's wait another day or so until the trend actually reverses, if in fact it reverses, right? Because it might not actually do that. All right, here's crude oil, very straightforward, like the euro. Break to the upside, opens up for a rally. So take out 64.59, sorry, 64.89 can reach 67.13. Here's lows. So if it goes down to 62.45, I think shares might look to buy down here. Stops at 61. Here is gold. The idea is just to turn bullish here. It's pretty much like the euro. The difference here though is that it has corrected already down to 50% correction level, and from these levels it could easily just probe deeper into the support area. But as long as it's trade above 1,307, I'll be bullish. If it breaks to the downside, it will probably correct a little bit lower, which wouldn't surprise me. But for now, let's continue to be bullish, I say, until proven otherwise. Now this is the DAX 30. DAX 30 is unfortunately a bit boring. The market moved down and up and down, and there's not too much action here. If you're looking for action, you do have better markets like the S&P 500. Here, what I think is happening is that people are looking at the euro and they're a little bit worried about what may happen as the euro gains. I mean, even ECB members are getting worried about the way the euro is gaining. Check out our morning update for more on that. And what's happening there is that the market is in essence worried that with the euro gaining, that the companies that make up the DAX 30 are not going to be able to profit as they did in the past. So with that in mind, I still think it makes sense to buy, but I think we still need that correction. And until we either break to the upside or reach these levels, I think we're better off just ignoring this market and then just wait until those two things happen. Okay, what else? I think that's it. Let's see if we have any questions. Still have a minute or two before we pause our 600 seconds. So we don't have anything this morning. Okay guys, I want to thank everybody that's watching, and I'll see you guys tomorrow at the same time. As well, don't forget to share on Twitter and on YouTube, especially like on YouTube. Please help us with that. We're trying to build up this webinar and this series of market updates. Really, so far it's looking good, but I think we can always do better. Have a good day, and thanks so much for watching.